Hey there, I'm Felicia from Compass Land USA, your go-to resource for great deals on rural and vacant land. I have a question for you. Are you trying to invest in land but can't get a land loan approved by a bank? In this video, we're going to go over what a land loan is, the different types, and why your bank isn't giving you the money. So what is a land loan? This is a type of financing that is used to purchase raw or undeveloped land. These loans can be used for a variety of purposes, such as building a new home, starting a farm or ranch, or making land improvements. Land loans are typically offered by banks and other financial institutions, and they may be secured by the land itself or by other assets. The terms of a land loan can vary depending on the lender and the borrower's creditworthiness and financial situation. When applying for a land loan, it's really important to consider the following factors. Down payment. Land loans often require a much larger down payment than traditional mortgages, typically like 20% or more, and that might even be on the low end. Interest rate. These land loans often have higher interest rates than traditional mortgages because the lender may view the risk as higher, and we'll get into that more in a minute. The loan term, so they will often also have a shorter term than a traditional mortgage because you are a higher risk. So typically you can expect around 5 to 10 years. Use of the land. The lender may have restrictions on how the land can be used, such as requiring that it's used for a specific purpose, like building a home, or prohibiting certain activities like farming or mining. The credit reporting agency Experian advises that people who are seeking a land loan should expect that they need a credit score in the high 600s to low 700s at a minimum. So when you're going through and applying for these land loans, you definitely want to carefully review the terms, consider the long-term costs and benefits before making your decision. You especially want to take a look at the interest rate and determine how much you're paying each month for the life of your land loan. So what are the different types of land loans? There are several different types that can be used to purchase raw or undeveloped land, and the term of the loan will vary depending on the type. So for example, the Federate Deposit Insurance Corp says minimum down payments for raw land, 35%, unimproved land, 25%, and improved land, 15%. Some common types of land loans include raw land loan. This is a type of financing used to purchase undeveloped land, totally vacant, totally raw. These loans may have a higher interest rate and shorter loan term than traditional mortgages, and they may require a larger down payment, like that previous example of 35%, and that hurts, right? That's a lot of money for a down payment. There's also an agricultural land loan, and this is used to purchase land for farming or ranching purposes. These loans, again, have specific terms and requirements related to the intended use. A land development loan is a type of financing used to fund the development of raw or undeveloped land. So these loans may be used to cover the costs of improving the land, so grading, utilities, and infrastructure. If you're planning to develop your property and build a primary residence in a rural area, you can apply for a USDA loan. A USDA loan is designed for low to moderate income families. They have lower interest rates, and depending on the situation, borrowers may qualify for a lot loan with no down payment. Again, these are typically for primary residents in a very rural area. We also have a land equity loan. This is secured by the equity in a piece of land. And to qualify for this type of loan, the borrower must have equity in the land and may be required to provide additional collateral. Another type is a land contract. This is a legal agreement between a buyer and a seller that allows the buyer to purchase the land over time, typically with the seller holding the title until the loan is fully repaid. So that's kind of the fancy term for it. You guys probably know it as seller financing, right? And my company, Compass Land USA, we offer this on all of our properties. So with seller financing, if the sale is closing through a title company, the title will transfer to the buyer at the time of purchase. And if the buyer defaults on the loan, the title company will issue the seller against a lien against the property. So how does a land loan work? This is a high overview of how it could typically work. First, you apply for the loan. And to apply for that loan, you're going to need to complete the application and provide financial and personal information to the lender. This is going to include information about the credit history, income, assets, and debt. Second, the lender will evaluate your application, and they're going to review your financial information, your credit history, determine your creditworthiness, and the feasibility of the loan you're asking for. The lender's also probably going to consider the current value of the land, your plans for the land, even if it's just recreational, and any potential risks associated with the loan. Third, the lender will make their decision. If they approve the loan, they will offer the borrower a loan agreement that outlines the terms of the loan, including the interest rate, loan term, so that's the length, how many months, that's loan term, and any fees or charges associated with the loan. You're going to want to review that carefully, and then you decide whether to accept or perhaps try to negotiate some different clauses in there. Step 4, you close the loan. If the borrower accepts, then you sign your agreement, pay any closing costs or fees associated, and then the lender will give you the funds you need to purchase your property. And then last, step 5, you have to pay that loan back. So you're going to be required to make the monthly payments to the lender to pay off your loan. The terms of the loan, again, including the interest rate, payment schedule, length, will all be outlined in the loan agreement. I hope you found this helpful. So there are a lot of different reasons why your land loan might not get approved, but at least now you know the different types of land loans and another option for you, which is seller financing if you don't want to go through a traditional financial institution. If you want to purchase one of our properties for sale with owner financing, call or text us anytime, 313-349-0434, and we'll be happy to help you out. If you enjoyed this video, please give it a thumbs up, and don't forget to subscribe to our channel. That way you're the very first to know when a land blog video or custom property tour video is published. Thank you so much for watching, and I'll talk to you soon.